So welcome everyone to the Romantic Asheville COVID-19 Business Loan Overview. I'm really excited to have everyone here. If you don't know me, I'm Sarah Benoit with the JV Media Institute. But today I'm really excited to have two amazing women who I've known for a long time here to help us navigate some of what I know has been a pretty stressful and confusing time for a lot of businesses. So a couple of housekeeping things as we go along. One is that if you do have questions, you can add them to the chat or to the Q&A feature. I'm going to be monitoring those, and basically what we'll do is we'll learn about a loan program, and then we'll have a little brief period to ask questions. And then at the end, we should also have a little bit of time to ask additional questions as well. So, like I said, I'll be monitoring the chat, looking at the Q&A. Feel free to drop in anything that you'd like to add, and then we'll make sure that we talk about all of those questions as we look at each program more in depth. But again, I'm really excited to have Adrianne and Sandra joining us today, and I'm going to let them get us started. Thanks so much, y'all.
Thanks for having us, Sarah. Sandra, do you want to introduce yourself just for a second so folks know who they're chatting with?
I will. Thank you, Sarah, for the introduction. Hello, everyone. I am Sandra Dennison. I am the Regional Center Director for the Small Business Technology Development Center, and I'm also an entrepreneur. So it's good to be here today.
And I'm Adrianne Gordon, and some of you may recognize my name if you're a Romantic Asheville partner. I'm the former Director of Operations for Romantic Asheville, JV Media, and the JV Media Institute. I now am with Davis Financial Planning. But before being with Romantic Asheville and the JV Media team, I was actually the program director for the North Carolina Disaster Recovery Loan Program and did a lot of work after the hurricanes that we had a few years ago and during the economic downturn. So I'm happy to be here today with all of you, and it's good to work with Sandra. We didn't get to work together at SBTDC, but we're connecting now. All right.
So for those that may not know about the Small Business Technology Development Center, I wanted to inform you a little bit about our mission and our vision as an organization. So our work is to positively impact North Carolina's economy by helping to grow small and mid-sized businesses and launch promising startups. So we're working with startup companies. Small business to us is under 10 employees, and a mid-sized business for us is over 10 employees. Our vision is to contribute as a partner to North Carolina's overall economic development structure. We are a bridge for the state and small business inside the UNC system, and we're also an SBA funded program. So our clients consistently achieve their objectives, outgrow and outperform their peers when you work with the SBTDC and through our no-fee confidential coaching services. So if you would like to get in touch with us, we'll have some information on that a little bit later on how to do that. But we do show that when we're working with our clients, you can outperform your peers with that. So I recommend getting in touch with us to help out. Thank you.
Thank you. And here's our agenda today for the webinar. We're going to start with some resources beyond loans. Always want to start with that low-hanging fruit that doesn't involve borrowing money you have to pay back. And then we're going to talk about the two main loan programs, the Economic Injury Disaster Loan, and then also the Economic Injury Disaster Advance, which is a grant program. We're going to talk about the Paycheck Protection Program, as well as the forgiveness option. There are a couple of short-term bridge loans available. We're going to go over those. And then we're also going to talk about some preparation before you apply. And we'll have some resources as well as some time for questions at the end. All right. So a few things to start with, and you may have already done this. I know we're several weeks into this crisis, but it's always a good reminder to think about some things you may already have on hand, like business interruption insurance. If you have been through a disaster in the past, includes the flooding that we had in 2004, you may already have business interruption insurance. We are under a declared disaster, so your business interruption insurance should kick in at this point. It's worth checking your policy. The other piece is that many, many banks are offering mortgage deferment payments for your home or your business. We know that for a lot of you, your business is your sole income, so this affects you personally as well. So whether you have a mortgage for your business or your home, you may be able to defer 1 to 3 months of payments, depending on your lender. You'll need to check with them directly. Unemployment is available now to the self-employed and to business owners. We've got a link here so that you can apply. Many of you may already have. And one thing to note is that the availability of unemployment is for the benefit that came through the CARES Act, which is that $600 a week. And Sandra, that's through the end of July. Is that correct? July 31st?
That's what we have so far.
Yep. My understanding is that self-employed folks are not eligible still for North Carolina unemployment benefits. You do have to apply through the state of North Carolina, however, but we would only be eligible for the $600 a week benefit. As Sandra mentioned, that is through July 31st. We are hopeful that it will be extended, but we don't have information on that just now. I know that that system has been overwhelmed and backed up. They are trying to add resources, so keep trying. The other piece on a personal note is that student loans, federal student loan payments and interest have been deferred. So if you are also carrying student loans, you can defer those payments as well, just to try to help your cash flow. And I think this is old news at this point, but the tax filing and payment deadline has been extended to July 15th, both for federal tax returns as well as state tax returns. So there's no payments due if you owe taxes from last year until July 15th, and penalties and interest have also been extended. We also wanted to make sure that you remember to talk to your business partners. Anyone who owns 20% or more of your business, even if they're a silent partner, are going to have to sign off on any of the loan programs that we're going to talk about today. And we'll talk about what that means for each program, but it's going to be important that you and your partners are on the same page about what the best option is moving forward for your company. And this was something Sandra added, which I thought was a great point, is that we need to be really careful about our information sources right now. Sites ending in .gov are your best sources of information. Unfortunately, there are a lot of scams out there right now. So just because it has SBA in the email or the domain name, the website address, does not mean it's actually from or about SBA. So make sure that that ends in .gov. Sandra, did you want to add anything to this piece?
No, I believe that is good. I do think that there's some updates that are going to be coming in on independent contractors and sole proprietors for unemployment. And so just stay tuned for that coming in, and just remembering that this is changing almost every day. So just keeping in touch with your resources.
Mm-hmm. Thank you. Okay, and so the first program that we're going to talk about are the economic injury disaster loans, and we're going to start with eligibility. So the first is less than 500 employees. I think that applies to almost every small business in Western North Carolina. Not every, but many. They are available to those who are sole proprietor, LLC, S Corp, C Corp, does not matter what your legal formation is. Also available to private nonprofits. So if you have or are affiliated with a nonprofit, serve on their board, for example, they are eligible to receive some of this financing as well. And impacted by the COVID-19 crisis. Pretty easy to prove at this point. Agricultural enterprises are not eligible. Sandra, can you give an example? Would that just simply be a farm that wouldn't be eligible?
It would be, but it is large farms that get a lot of USDA funding, so a lot of other government funding. So there will be opportunities for those, but it's not a part of this disaster loan.
Okay, because I know some of our tourism businesses can have an agriculture or farm or orchard component.
Most of those will be eligible for this. These are really large enterprises.
Okay, thank you. Good to know. Okay, so details around these loans. The interest rate for the economic injury loan is 3.75%. The term, the information says it's a maximum of 30 years, but in my experience, 7 years is the most common term. So as you're thinking about how much to borrow and what that repayment is going to look like, go ahead and plan on a 7-year repayment option. I've seen 7 to 10 is the most common range, but typically it came back as 7 years. The amount is up to $2 million. However, you'll ask for an amount based on what you feel you need, and SBA will determine the amount based on what they feel you can repay. So there may be a difference between what you ask for and what you're approved for in the end. There's no collateral required if you're borrowing less than $25,000. But if you're borrowing more than that, be aware that SBA's preferred collateral is real estate, and this could very well include your personal home. So if you have business properties, say you own a bed and breakfast or a retail location, they would take that first as your collateral. And keep in mind that it's the value of that property less what you owe on that property with a mortgage. That difference is the collateral available. If you want to borrow more than what's left on that collateral, they will be interested in taking your personal home. It's one of those situations where because it's an SBA loan, you can't say, no, you can't have my home. You'll have to negotiate with them and borrow a lesser amount until, in their mind, the math makes sense in terms of available collateral. The loan is to maintain or restart a business, not to refinance existing debt. So even if you're carrying an existing loan with a much higher interest rate and you're having a hard time making those payments, this loan is not to refinance that debt. It's just to stay in business or to reopen your business. The approval criteria is primarily based on the owner's credit score. And Sandra, and this is going to be every owner who owns 20% or more, correct?
It is. And the primary owner will be the one that will be looked at first.
Okay.
They have changed the criteria from the beginning of this.
Yeah, they have streamlined it quite a bit. So I'm going to come back just one second. So this is the loan itself. And so this is when you want to borrow in order to recover your business. This same program has an advance option. And this is up to $10,000. And this is the grant. You do not have to repay it. And Sandra, someone could ask for less than $10,000 if they wanted to. I don't know.
Yes,
but
it is. What we've been seeing a lot is people see that $10,000 and they think that it's going to be $10,000, but that it is important to note the up to $10,000, and the SBA is determining that through the application process.
Okay. So you can ask for $10,000, but they may come back with less, just like the loan. Okay.
Mm-hmm.
It's the same application as the loan. There's a box to check on the final page to request the advance itself. So you're going to go to the same place for both. If you need more than $10,000, go ahead and apply for the loan for what you need and check the box for the advance. And then SBA will determine both the amount, the total amount, as well as the amount of the advance. The final loan amount that you have to pay back will be less the advance, which again is up to $10,000. So for example, if you determine that you really need $30,000 in order to maintain your business or to restart your business, you can request an advance of $10,000. And then should you be approved for all of that, you would end up owing $20,000.
Mm-hmm.
So here's where to apply. We've gone ahead and given you the link, and here's the information you'll need to apply. Again, if you just want to ask for the advance, you have to fill out the same application as the loan. You'll just check the box looking for the advance at the end. So you'll need your employer identification number or your social security number if you're a sole proprietorship, your gross revenue from February 1st of last year to January 31st of this year. So you'll need a little bit of your financial data. You'll also need your cost of goods sold for the same period. For service businesses, this may be 0 or very close, but you'll need that number. You'll need to know your number of employees. This is not your 1099 contractors. These are employees that you pay payroll taxes for as of January 31st of this year. And then the Social Security number for everyone who owns 20% or more of the business for that credit check. Again, as Sandra said, they'll start with the primary owner, but they will look at everyone. Anything else to add here, Sandra? I know you've been through and looked at this application in detail.
The one thing to note on these loans is that if you have applied prior to March 29th for the economic injury loan, then you will want, and you're interested in the advance of up to $10,000, you will need to go back onto the site and apply for that advance, because that advance was after the 29th of March. So again, if you applied before the 29th of March, you will need to go back in and apply for the advance piece of that. If you were denied for the injury loan, so if you have already received a denial on the economic injury loan, you still are available to apply for the advance. So even if you have gotten denied already, you can go back onto the portal and apply for the advance. And you have until the end of December to do that.
Okay. And that doesn't matter when you applied for that loan. So if you
It
applied
doesn't
last
matter.
week.
Right, correct. It does not matter if you were denied, you still can get the advance.
Right.
So we have a couple questions. Can we open up for that?
Absolutely. What do we have?
So the first question, just coming from Justin, was, do you know if they've increased the amount where you don't have to have collateral from 25,000 to 200,000? There was some message out there that amount had been increased. So if you have 200,000 or less, they won't require collateral. Any confirmation on that?
They are, from what we've seen, there are some leniencies from what I say normal or usual economic injury loans that we see, as Adrianne had mentioned, through tornadoes and hurricanes. This is different, as we all know. So they have opened some regulations. However, it is still that $25,000 collateral, but then it really depends. It's a case-by-case basis that they're looking at from what we've seen. So we have seen the $200,000 open up, but it hasn't been confirmed that every case would be for that.
Okay, great. And then we have another question from Nicole. She says, when I applied, I did not have the opportunity to ask for a particular amount. Should I be worried? I received a confirmation number online, but I have received no other further communications otherwise. I'm assuming the system is overwhelmed and trusting that they'll get to us when they're able to, but I'm also feeling a little anxious. So do you guys know, is there some delay going on right now? And should she have specifically asked for a particular amount?
So, excuse me, they are saying that it is going to be 7 to 10 days. That is what the SBA has come to us for direction. However, that is not what's happening. Even across the state, we're staying in communication, and it does seem to be longer than the 7 to 10 days. Also, understanding the anxiousness of this. I mean, everyone is feeling that, and we get a lot of these questions. Remember to keep your email that has your, you have a number that's attached to that, and that's your case number. You want to make sure to keep that number so the SBA will reach out to you, and you'll want to have that number on you and available. Also, you want to be able to communicate within 10 days if they contact you. And it's also important to have an alternative number on your application so that they have multiple numbers to reach out to you, just for an FYI on that. It is, the SBA caseworker will get in touch with you, and then they will determine the amount for the EIDL loan. So there is not, you can recommend, but they, as Adrianne had mentioned, they will work with you on that amount.
Okay, great. So Nicole,
the application does not have a slot that says requesting amount. It's just, I'm requesting a loan. Check the box for the advance. Okay.
Great. So Nicole, let us know if you have any additional questions to that one. And the final one is, on the application, there's one field for business owner or the other business that owns the applying business, and then fields for individual owners. How do businesses that are owned by two businesses properly complete the application?
So that's an interesting question. Do they have two EIN numbers would be my question. If they have two EIN numbers, then you would apply separately for those loans. So they look at that as, if you have two EINs, it's two separate businesses. And if one business is an affiliation like a DBA, it would still be the shareholders and the owners of that and not the business entity. Is that how you would look at that, Adrianne, as well?
Yeah, I think I'm thinking of an example in this case where one business is owned by two different companies. And so I would put the majority owning company under business owner and then list the individual owners underneath for names below. I think that's the best way because, you know, they're going to track everything back. And then when the caseworker gets in touch, I think, you know, explanation can be provided and, you know, all of the documentation to show the ownership of the company. This application is very, very stripped down. And so it doesn't require the additional documents that are normally required. Normally you have proof of ownership and some other things to demonstrate who owns what and how much and all of that. And they've taken that away in trying to make this faster. So it does create a little bit of question, but I would say best faith effort, always lead with majority ownership. List as much information as you can and just be prepared, you know, to explain to the caseworker when they're in touch. This is not terribly uncommon.
Okay, great. So I want us to be able to keep going on and talking about the other programs. So just so everybody knows, I know a few other people have joined us late. If you do have questions that you'd like to chat in or add to the Q&A feature, feel free, and we'll be stopping periodically to answer those questions as we go along. But thank you guys so much for those answers, and let's talk about the Paycheck Protection Program.
Okay, great. I will share my screen now. Yeah, okay, great. Thank you. So we're going to talk about the Paycheck Protection Program loan. It's been coming through this week. We've been calling it the P3, a little bit easier to say. So if I refer it to the P3, it is the Paycheck Protection Program. This is different than the emergency or economic injury disaster loans. So the Paycheck Protection Loan, for eligibility, you must again meet the definition of small business, and that is less than 500 employees. If you have questions about whether or not you are a small business, you can go on the SBA.gov website and look up your NAICS or your industry code for that. In travel and industry, most of those that I'm aware of is definitely under 500. There are some manufacturing companies that are above that, but for this, it is 500 employees or less. And this Paycheck Protection Program was part of the CARES Act, and it came into operation on April 3rd. And that is when businesses were available to begin application process. This is for employees. At the beginning of this, there was conversation that that 1099 employees would be available for this loan. That is not correct. This is not for independent contractors that you employ or have on a payroll. This is strictly for your employees and not 1099s, and then not just the owners. It's other employees of your company. Also, this is for companies that are impacted by COVID-19. So I was on a webinar yesterday and there were questions around what if I had laid someone off prior to March or prior to the COVID-19 crisis. This is for payroll that is affected by the COVID-19 crisis. So you will want to remember that. Also, these loans, there is forgiveness that is available for some of this loan, but there are requirements for that. And you will want to go to your bank to get the applications for these P3 loans. This is an SBA 7A product. And so companies have gotten there is confusion on whether or not this is straight through the SBA, and it is through your bank. So the EIDL loans that Adrianne was just talking about, though, that is an SBA product. So that is a loan that is straight through the federal government. These P3 loans are through your banks. So you want to contact whom you have a relationship with and talk with them about these loans and their application process. Each bank, they are trying to streamline this, but each bank has had different regulations and restrictions that they're using for this. So you'll want to go with what they are telling you.
And also keep in mind that if for some reason your bank is not participating in this program, if you're with a small credit union, for example, and they're not an SBA affiliated lender, you'll need to ask them for a recommendation, because you can't just call a bank and apply for this. A lot of banks are only accepting applications for their own customers because they're expecting such high demand. So I've seen that from several banks that they're coming out saying, we're starting with our customers. So that's why we're suggesting you start with your bank and then go from there. And you have a relationship with them. So that's always best.
Yes, that is true. They, as you can imagine, there's an influx of these applications. And so they are going through the relationship first. Also, there are CDFIs in our area and throughout the state that are also 7A lenders and have been approved for doing these loans. Organizations such as Mountain BizWorks, Carolina Small Business Development Fund are two examples of that. So with these Paycheck Protection loans, the P3s, the interest rate is at 1% for these loans. The term payments are for 2 years. And then there is no payments for 6 months, but please note that your interest will be accruing during that 6-month time. There is no collateral for these loans. And there is a guaranteed amount of 100% of these loans. So this is, if anybody's familiar with the SBA 7A loan, that's what this is. So there is a guarantee of 100%.
Sandra, can you explain what the guarantee means? A lot of us are familiar with collateral. You have to put up your real estate in order to secure a loan. But what's the difference between that and a guarantee for those who don't speak this language?
Right. The guarantee is under a good faith that you are going to pay this loan back. So that is what the guaranteed amount is that you will, this is a loan just like you would get for working capital for as a business loan. And then the SBA is guaranteeing the 100% of this loan through the bank.
And I just want to note that this payment term is short. So this could end up with a very high monthly payment on the final amount of the loan. So please keep that in mind. You end up having 18 months to pay back the principal. So this could become a hefty payment pretty quickly. It's going to be important that you and your banker work together to do that math so you know what that payment's going to look like in the end.
It definitely will be. And it is for people to note that this is, and we'll get into this some more too, but it is mostly for payroll. So it is going to be 75% of your payroll for this. So this loan is to help keep businesses afloat and people with jobs. That is the primary reason for this loan. And the forgiveness of this loan, which is very unusual. So we have, with this loan, there's a lot of questions on how do you get to the amount of which you would want to borrow. This area is still a little gray, I will say. So you do want to make sure that you're talking with your banks on this. What we do know is that the formula for this is that it's 2.5 times your average total monthly payments for your payroll. So then also your mortgage and rent plus payments for any new loans obtained in the last year. So you want to take your gross amount of your payroll and multiply that by 2.5 times. This formula then gives you your payroll amount for 2 months and then also gives you 25% of your mortgage and your rent for this loan when you do that formula. For seasonal businesses, the average monthly payroll can be calculated by using the months from March 1st through June 30th of 2019 to get that payroll amount. And then you want to multiply that by 2.5 times. So much like the EIDLs, these are employees not for 1099 contractors. So you want, whenever you are calculating your payroll, you want to be sure that you're not including any independent contractors in that payroll cost. It is just for your employees. It also can include healthcare benefits to your employees, your mortgage, interest, or rent, and your utilities. The interest payments on these loans are obtained before February 15th of 2020. So there's a lot of questions that we have heard around the employees and your average, how long do you need to keep people on payroll? So for these loans, you must keep your same number of employees as you had on average last year. So that would be, they're looking at the dates February 15th through April 27th. And anyone laid off must be rehired by June 30th. We are not sure about after June 30th what may happen, and we're hoping to get more clarification on that. But in order for these loans to get the full forgiveness, you will need to keep all of your employees on staff by June 30th.
And that doesn't mean the same people. I just want to clarify that, if you had, especially if you're a seasonal business, if you had on average 6 employees for that time period last year, then you're just looking to have 6 employees this year. It doesn't have to be the same people. It just has to be the same total number of full-time and part-time people added together.
It does. And again, this loan is to keep people in jobs.
Right.
That's a great way to remember what this P3 loan is for. And it is primarily for payroll, even though there you can pay for some mortgage and utilities out of this, out of these funds. It is majority for your payroll. So keeping that in mind, as Adrianne had said, you just to get the full forgiveness, you need to have the same amount of employees by June 30th. Also, whenever you bring on your employees, say you have laid them off or you're a seasonal business and you're getting ready to rehire, then you cannot reduce anyone's pay more than 25%. So if you bring them back on and you get this P3 loan, you cannot reduce their pay by more than 25%. And what to remember for that is that you have included your payroll amount for this loan prior to that. So that's the money that they are giving you is to pay for that payroll. So if you reduce it under 25%, then that is more money that in your pocket for other items. And that is not the purpose of this loan. It is for the payroll. So if conditions of these are not met, you can still receive forgiveness. And that all depends upon how many employees you keep or are able to hire back on staff. And so there is a forgiveness of up to 75%. for half the employees that you keep on, and then there's formulas that continue after that. Those are still a little gray. So again, it is best to talk with your bank about what that means for you and your business. As an organization with business coaching, we can help you run financial analysis and help determine what is your best options, but your bank is going to have the information for you on the forgiveness and of these loans. So as mentioned, you must apply for the forgiveness to the lender. So when you're working with your lender at the bank, you will want to let them know that you're interested in the forgiveness portion of this loan. And they will, and you will provide all your payroll information and documentation to them. And they have moved to an automatic system, but there are documents that you will want to fill out as well as part of this. You can go to our website and download those forms, and I'll give you access to that here in a few minutes. But if you want to review the forms to make sure that you have everything that you need as you're working with your bank, and your bank will also have these forms as well. So these P3 loans are for expenses that are accruing within an 8-week period. So there has been some questions around, when does this 8-week period start? Everything that we have read and that we hear from our partners as attorneys, CPAs that we're consistently being in communication with, and the SBA documents that we're reading, is that the 8-week will start when you receive your loan. So it will be different for everyone. You will want to, if you receive a P3 loan, you will want to keep your own time clock going on what your 8-week period is. You should know within 2 weeks of this loan as a business, and if you need help with that, please reach out to us. But you should know within a 2-week period of how long that you can go with these funds before your 8 weeks is up. And then with that, you can start making financial decisions from here. So for these 8 weeks, this is what the funds can be used for. So it's payroll. You can use for rent or interest on business mortgage. So the rent is if you have a lease agreement. You can pay funds for that for these P3s. Utilities, which would include electricity, water, and internet. It is important to note that your rent, mortgage, interest, utilities, again, cannot be more than 25% of this forgiveness amount. So this is for payroll. So 25% of this loan can be used for rent and mortgage interest and utilities. The other percentage will need to be used for payroll. It is also important to note that this forgiveness amount will not be taxed. So if you get a P3 loan and you keep 100% of your employees and you get all of the forgiveness for this loan, it is not taxable. And as Adrianne had mentioned before, keeping in mind that this loan does have a short repayment. So it is a 2-year period. It is currently set at 1% and cannot go over 4% during this 2-year time. And so as an example for the repayment, if you owe $20,000 from this P3 loan, and that's after a forgiveness amount. So if you were given $30,000 and you kept only a quarter or 75% of your employees, then perhaps you would have a $20,000 after all of the forgiveness was over. Then the loan payment would be about $838 per month. So it's important to note that this is, even though it is at 1%, it is only 2 years. So you want to be sure that you're keeping in mind what your amount a month is going to be. So before even accepting this loan, you want to be able to see whether or not you can include, can pay for this.
And I would personally run numbers as if you were going to get half of it forgiven, none of it forgiven, and look at what those payment amounts are going to be just in case. Things continue to change and we just don't know what life is going to look like come June. And so it's really important to keep in mind that you need to plan for best case and worst case scenario because that payment amount could be really, really high if the forgiveness doesn't work as you expect. You may have a harder time getting employees back. You may find that you can't afford them. It may work out exactly as you hope, but just run those numbers just to be safe.
That's a good point, Adrianne, because during times like this, we are in a big need to keep our businesses running, and there's a lot of emotion around employees and all of that. And so we do want to make sure that we're still doing analysis on whether or not we can repay these loans and can afford them coming through, so that we don't, as business owners, get into a situation on down the road that we're not able to afford something that we were working on for just a few months to stay in business. So that is a very important thing to note, that you want to make sure that you can take on these loans before you accept them.
And Sandra, am I correct in recalling that both the economic injury loan and the Paycheck protection loan, neither of which can be included in bankruptcy because they're federally guaranteed? Is that still correct?
That is correct. And so they are in, I'm not sure about the PPPs. I'm thinking since those are a 7A loan, that could be included in a bankruptcy, but because they are through a bank, even SBA guarantee. Now, the EIDL loans, those are a federal loan through the SBA. So if you take on these loans, even though it's a 30-year term at a lower interest, 3.75% for a small business, 2.75% for nonprofit, these cannot be forgiven through bankruptcy. So it's much like a student loan. They stay with you of the person. So that is important to know. I think we covered.
And I hate to even bring up worst case scenarios like bankruptcy, but having done this work, I know that it's just important to understand the long-term implications there. And I think Sarah has some questions for us on the Paycheck Protection Program, correct?
Yes. So the first one, just coming from Joel as confirmation, is I'm a sole proprietor with no employees. So does that mean that the P3 loan is not the correct vehicle for me?
Excuse me. So these April 10th is opening up for sole proprietors and independent contractors. If you do not have employees, then this loan is probably not for you. However, I would recommend contacting your bank and going through the application process. At this point, it's not going to hurt anything. There could be opportunities for you with this, at least to cover your own payroll and anyone else that might be in your family as a sole proprietor. But this is, if you do not need this for payroll and you do not feel like you could pay 25% of this or 75% of this for payroll, then this would not be the loan for you. However, I would contact your bank and go through the application process and talk to them about that. There could be opportunities for you for this.
And again, this loan is for payroll, so this will not cover suppliers, vendors, business insurance, those other regular expenses that you have, other loans that you may have for, the startup or maintenance of your business. This is strictly for payroll. So like Sandra, I would take a hard look at this as a sole proprietor and assume that there are other expenses that need to be covered. It's also very possible that a business that's been operating for a long time does not have other overhead than paying, any contractors or the sole proprietor. In that case, this could work. But it seems like a less likely scenario for a sole proprietor for this loan. But that is a great question to go to the SBTDC with and say, this is my situation. This is my specific situation, my financials. What's the best option for me? And then Sandra and her team can actually look at Joel's situation and his financials and see what's the best match for him. That's what they're there for.
Awesome. So the other question we have is from Monica. And basically she says most people are going to make more money on unemployment than being rehired. Do you think they're going to make adjustments to the June 30th deadline? Should we not be able to hire everyone back to as many hours as they had? We don't want to hire people back just to get a loan that doesn't feel right. We're a bed and breakfast and we're not even sure when we're going to be back up to normal occupancy. Thank you.
So so this is a different time, right? I mean, there are a lot of uncertainties, and in my role as well, there are a lot of uncertainties. We're not used to not having at least some of the answers or being able to source you to the answers. And even the experts within, CPAs, attorneys, we're all getting this information as it comes in, and it changes daily. So we have no idea what's going to happen after July or June 30th with the unemployment. We really don't know. If we go back on to work in May, then, or back to normal or as usual, then this could change. If we go after that, then this could change. I think that we have seen that the government is being flexible and pivoting as best they can as we're going through this. And so that's why there's so much change. And then if you feel that you cannot bring, like if you do financial analysis and it looks like you're not going to be able to bring on employees at the amount that you normally do, and you have these uncertainties, then this loan is probably not for you. And so it's really to go through, I would recommend downloading the documents and taking a look at those, running through them and see what you have, do a financial analysis and reach out to us. We can help you with that, to run some scenarios on what you're looking at and running those uncertainties inside those scenarios. But I wish I had a better answer for you, but we really don't know what's going to happen after tomorrow or next week. So.
And I'll just say that I know that taking care of employees and thinking about what's in their best interest is really heavy on the hearts and minds of business owners. And you're right, in many cases with the additional unemployment from the CARES Act, people will make more with unemployment. And so my thought is if you have valuable employees, they're hard workers, they know your business, they're dedicated, they have institutional knowledge, stay in touch with them, support them. Let them know when you get the confirmation from unemployment and that you've done your part. Keep them posted about when you think you're going to reopen. Maintain that relationship. And so that when you're ready to reopen and you can rehire them, you can work together and you still can work together as partners in keeping your business open. And be honest with them. That you don't know when you're going to be back to full occupancy. You think they'll make more. Ask them to stay in touch. Those small things in a time like this can really keep those relationships and make it easier for you to ramp back up quickly when you can reopen with the same employees you had.
Yeah, and I just want to throw out, especially from the perspective of the tourism industry, that, I think it's important to meet with people like Sandra's team, Monica, because in the tourism industry, I think the issue we're going to run into is even if things start to go back to quote unquote normal in some way, we know that people traveling is not going to immediately bounce back. Do you know what I'm saying? So even if some businesses start running again and things start just going more in the direction of us getting back to our regular lives, I think what we're going to see is in the tourism industry, it's especially hard because even if that happens, not everybody's going to start taking a vacation right away because I think there's all these concerns that have come up. So I do think it's important, Monica, for you guys to especially look at, what is going to happen after June 30th, because I still think the tourism industry is going to be impacted throughout the summer, in my opinion.
Yeah, I would agree with that. So running scenarios and looking through everything.
Great. And then I did see one other question earlier. Do either of you know, is Mountain BizWorks offering P3 loans? Yes?
Yeah, so I have gotten confirmation that they were accepted to do the P3 loans. So they are a SBA 7A lender, and so they have gotten the confirmation for that. So you can reach out to them.
All right, so I think we've got a few other things that you guys want to talk about before we wrap up. So I want to go ahead and let us do that, and then we can come back for some final questions at the end.
Yeah, so thank you, Sarah. And we're going to go over some other opportunities, so additional resources, and noting that there are other things out there for you that are not just these EIDL and these P3 loans. So there's also a short-term bridge loan that is available and is often available during disasters. And these are for a short-term bridge loan until you get your economic injury disaster loan. And so these can be also done through Mountain BizWorks. They had just gotten brought up, and other CDFIs in the area. Thread Capital is across the state, and they are also doing these bridge loans. It is a foundation through the Golden Leaf. And so there are opportunities inside the region and the state where financial institutions are offering bridge loan opportunities. There's also an SBA Express bridge loan opportunity that's on our website that you can get information on that. And then there's the North Carolina Rapid Recovery Loan, which is, you can go through Mountain BizWorks and Thread Capital for that. If you all have not seen the Buncombe One Fund, it has some partners that are local to the Asheville area. Asheville Chamber of Commerce, Workforce Development, Land of Sky is a part of that loan. I believe the Tourism Development, the TDA has put money into this loan. And there is information on that on One Buncombe is what that is called. So, and it's a fund for local businesses. Adrianne?
Yep, and I think that in all three cases, these are loans that you can get faster, but then if you get a P3 or an economic injury loan, you have to pay the bridge or recovery fund or one fund loan back. So they're very short term, with the assumption being that you're going to get a longer term loan. They all have contingencies if you don't end up being approved for, say, the economic injury loan or the Paycheck protection loan. But the intention is that these are literal bridge funds just to get you through until they come in. So just keep that in mind.
Yeah, that's a great point. For if you don't get the advancement or if you need some more funds, the bridge funds are a good thing to look at. And so it's just to keep you going until. So thank you, Adrianne. Also want to point out that our website, the SBTDC, is a first responder to disaster recovery. And Adrianne's been a big part of that with our organization in prior years. We do, I believe, a really good job at getting information out to the state and to small business. And one thing is that we are very careful about the information that we're sharing as well. So it is confirmed information. Currently, in our circumstances, as things are changing so quickly, we are updating that 24 hours. So if you do go on there, you want to keep looking things up because it is changing. But you won't go on there and see anything that has not been correct, because there is a lot of information going out there that's not correct. And so if you go to our sbtdc.org/coronavirus, you can get more accurate information and know that you're receiving correct information on all this stuff. We also have a link on there for that is just money. And when you click on that, it'll go through all of these different loans. It goes through the bridge loans, the EIDLs, the Paycheck protection. And it also has a community loans at the bottom, which we do have the Buncombe One Fund connected to that. And the North Carolina Rapid Recovery Loan is a part of that page as well. For those of you that may not be familiar with our organization, we also have a procurement technical assistance program. So if you know of anyone that is interested in working with FEMA and disaster recovery, that is something that our organization is covering, and we're doing webinars on that. The first one starts at 2 o'clock. So I wanted to make sure to let everyone know that it may not pertain to you, or there might be opportunities for your staff, or say cleaning staff or landscaping staff that you're currently working with, could also look up these FEMA disaster recovery operations. Then, so now we have, what are your next steps? If you're not sure if you're interested in a loan, or maybe you are, but you're not sure which one, or what do you do right now? And so I want to talk a little bit about how the SBTDC can help you. And there's other resource providers across the state also, that these are things that you can begin working on your business with. One of the things, and I think we've stressed this several times throughout this webinar, and that is to be sure to assess your financial situation. If you need help with that, please reach out to the SBTDC. We have staff that is highly educated on being able to help you with this, and we can run scenarios for you. Also, you want to start looking at developing strategies for a continuity and recovery plan. So much of you may have been in business during the economic downturn. So looking at what are some things that you did during that? What are some lean processes, and how did you have to adapt? These would be great things to look at for with what we're dealing with right now, and as we're coming in, as Sarah had mentioned, into our summer and tourism months. If you need help with any of that information as well, we're here to help you with that. Analyzing your cash flow, as Adrianne has stressed, to be sure that you're looking if you take on these loans, what does your cash flow look like? How many employees can you keep on staff and still be able to pay some of your fixed expenses? Also, evaluating options with your creditors. This is something we're working with clients currently. If you have any debt out there if it's a business loan, or if you have any credit card debt, if you have your car loan, any loans that you may have out there, please reach out to them and ask for deferments, or ask what they are offering to their clients during this time. Most are offering deferred payments, and this could be something that could really help your cash flow situation during this time. So even if it's your mortgage, your personal finances, also any of your business finances, please reach out for the deferments. There has been questions that I've been a part of the few weeks prior, where do I just not pay my rent? Do I just not pay my credit card payment? And the answer to that is no. If you communicate, it's really about communication. So don't just stop paying things. Reach out and communicate. We are all in this together, and I've really been amazed by how the nation has come together with our banks, our credit card companies, and our utility companies have really seen that this is a global issue, and how can we help? And so you really do want to reach out to all of these individuals and organizations to help with deferred payments if needed. Also, if you need help with preparing your SBA economic injury loan applications, and then any of your P3, if you have questions around your payroll and what does that mean, we can help you with that, or we can resource you to a service industry that can. Another thing that's starting to become a lot of conversation is around effective supply chain management. And so if I remember having my business in 2007, 2008. And one of the things that we started doing is we started creating a cooperative. So reaching out to your partners, to your network, and seeing if there's opportunities where you can bulk purchase items that you may all be needing, or reaching out to your local community to see if there's any local companies that can offer items that you normally may source from other sources and you're unable to get, or you're wanting to support your local community. And so looking at supply chain management is something that we can help you with. Also would recommend reaching out to your network and start talking about how you can create this unofficial, or some people will create an official cooperative on how to bulk purchase. We also have our cooperatives here in Asheville that can help you with that as well, like the French Broad Cooperative.
Sandra, what's the best way to get in touch with the SBTDC right now if folks are interested in following up?
So the best way currently is to go to the sbtdc.org and to the WCU, so Western Carolina University Center. Also, I'm happy to share my email address. You can email me directly. My email is ssdennison@wcu.edu.
Thank you.
Great. And we've just got one final question about the P3 loan, because a few people were interested in knowing, is there any logic or opportunity to borrowing a smaller amount to keep key employees on the P3 loan instead of borrowing the full amount? Is that even allowed?
You can do that. So we have even had, even though we've not heard anything on the EIDL loans, we have heard across the state of clients that have received funds for the P3 already through their banks. And what we have seen is there have been a couple that have been under $1,000. So it really just depends upon what the company, it's a case-by-case basis. You will work with your bank on that for the loan amount and what you need to cover yourself through June 30th, or through an 8-week period. So that is, so it doesn't have to be a $100,000 or $1 million loan. It can be, $1,000 or under. We have been seeing that.
Yeah, the maximum is 2.5 times your payroll, but that's the maximum. So you can choose to borrow less to keep key people, particularly people who are going to be really difficult to replace. Long-term people, senior people, people who are highly skilled, who you just cannot replace easily. It's probably worth keeping them, particularly if the unemployment is going to be less than what they made with you, or put some other burden on them. So that's a great question.
Mm-hmm. And it can't go over $100,000, just to be aware of that. So if you are paying someone over $100,000, it will have to be less than that.
Well, it doesn't look like we have any other questions, and I know we're right at the top of the hour, and we all need to get back to work potentially. But Adrianne and Sandra, I just want to say thank you so much for joining us today. That was really insightful for even me. I really appreciate just all the detail that you put into helping everybody understand their options, because as you said, this is a really unique and different time than any of us are used to. And I do want to encourage everyone, over the years, myself as a business owner and entrepreneur in Asheville, the SBTDC has been a huge resource for me. I was using the SBTDC resources probably close to 15 years ago when I first met Adrianne. So
Yeah.
I want to encourage everybody who's part of Romantic Asheville to utilize that resource, because it's a really powerful support system that we have here in Western North Carolina. But thank you all so much for being here, and I'll stay on for a few minutes just in case there's additional questions. If you have them, I'm glad to field those. And for all of you, just know Romantic Asheville is going to continue to be doing some webinars for their partners around different things that we can do to navigate this unique and different time. But thanks everyone for being here, and have a great rest of your day.
Thanks, Sarah.
Yeah.
Thanks, Sandra.
Yes, thank you both.